What's up everybody, welcome back to AZ Trading. It's the 27th of July FOMC day and we're looking at the Nasdaq 100. In this video I'll be showing you guys an unclean example of the RMR pattern and give some insight on how to use correlating markets to either support or oppose your trade idea, which can save you from losing trades such as this one here. So first let's zoom in onto this area and find the setup. So if you've watched any of my previous videos, you'd know the framework I use to trade is called the RMR pattern. So first we look for a raid, so above this swing high. Once we reach above that, we call that the raid. The next thing we look for is the market structure shift. So once it starts breaking swing lows, which it does over here, we call that the market structure shift. And finally, we look for a return area. So in this case, we used a gap to return to. However, you can use an order block, you can use the Fibonacci, but for this example, we're just going to stick with the gap. So once it returned to this area, we're able to place a short with our stop loss at the top of the raid over here, which is always controlled, and we can start looking for objectives below. So this is the RMR pattern. However, when we take a look at some correlating markets, we'll be able to see many reasons that oppose this trade idea from panning out. I have some screenshots that I took in real time that show the reasons why I didn't take this trade and the reasons why it was likely to fail. And this second screenshot here is just the result of this trade being stopped out. So first we'll need to know how to use correlating markets, which could be an entire video by itself since it can be quite complicated. But long story short, if the US dollar index, so DXY, or anything USD / whatever, such as USD CAD, USD JPY, goes up, then the indices like NAS will go down. And on the other hand, anything paired against the dollar in this format, such as Euro USD, Pound USD, gold and silver, if those go up, then the indices will also go up. So for this trade, we have a bearish RMR, so we want this trade to go down, which means Forex pairs such as USD CAD, we want to see go up. So if we have a look at the USD CAD pair on the 5-minute chart, we can see right over here we have these clean equal lows, and if there are such clean equal lows there, price is more likely to draw into that area. This little vertical red line here just shows when the entry would have been on the NAS. So price would have been like this, and we can see these equal lows. So if USD CAD has more reason to be bearish on the Nasdaq 100, that means the Nasdaq has signs to go up, which is an opposing idea from our trade. And not only did USD CAD have these equal lows on the DXY, the dollar index, they also had these equal lows here. So that is the first reason that can predict this bearish trade to fail. The second reason I had over here is the Dow had equal highs. And we know that indices tend to move in unison, meaning if one of them goes up, most of them also go up. So let's have a look at the Dow over here, the US 30. We're on a 5-minute chart. Let's scroll back a bit and we'll be able to see these very clean relative equal highs. So resting above there is a lot of liquidity, and so price will be drawn to that area. So at the time of where our entry would be, those equal highs had not been taken yet, but price would be drawn towards that area. So if price is likely to be bullish on the Dow, that means on the S&P and the NAS, it's also likely to be bullish. So that is the second reason why this bearish RMR trade is likely to fail. And finally, the third reason, gold and silver. So this is in the form of XXX/USD. So if gold and silver go up, then we expect NAS to go up. So let's have a look at those pairs. So first, gold. If we scroll back a bit, we can see these relative equal highs above, and at the time of the trade on this red line, those highs had not been taken, and so that would be a likely location for gold to reach. And similarly on silver, we can see these relative equal highs over here as well, and at the time of the trade entry, those highs have not been taken, so once again, that is a likely objective. So if gold and silver both have so many reasons to go up, that means the indices, like NAS, also should be going up. And since the trade we saw formed a bearish trade, all these signs we're getting from these correlating markets are telling us that indices are more likely to go up, which is why we shouldn't take this bearish trade. So even though this RMR setup looks quite clean on the 1-minute chart, identifying the pattern is half the battle, and the other half is knowing when to use it. And using correlating markets, like how I've shown you in this example, is a very powerful tool to help you decide if your trade is very likely to happen or not likely to happen at all. That'll be all from me. If you enjoyed this video or learnt something new, please leave a like and subscribe. If you have any comments, leave them down below. I'll get to every single one of you. And as always, take care guys. Peace.